Good afternoon, everyone. Welcome back to the stock market video. And if you guys are looking for the commodities video, I have just uploaded that one. And today we'll be looking at QQQ, Sp500, Nvidia, Tesla, Apple, Amazon, Google, Microsoft, and Meta. So we'll be looking at their support and resistance levels, as well as what's the most likely scenario price will be heading into later this week. So we had a pretty insane rally for the past 2 weeks, and I'm surprised we're still going. But as you guys always know, I always talk about following the trend. And as long as the trend is intact, we don't want to be fighting whoever is currently in control of the trend. And so let's take a look at starting with QQ as well. So on the hourly trend, ever since this bounce at the bottom, when we confirmed the hourly uptrend back to the bulls, that was it. And we have not changed the hourly trend back to the bears all the way from that point, even until today. We had a couple of big drops along the way. A couple of us initially here as well, but not a single one of them confirmed the trend. For a trend to confirm, it needs to have a big enough drop, form a pivot, a lower high, and then breaking to a lower low. So a lower high here, and then breaking the prior low for that to confirm an hourly downtrend. All we got was a big enough drop, that's it. We never confirmed the trend. As you guys can see, when we don't confirm the trend, bulls take back in control. And another thing is I want to talk about is that everyone and their grandma saw this resistance down, right? So this downtrending resistance where we've been looking at as well for the past, three months? And this was the resistance. So that's the support. So when we had this bounce and then bounce, everybody set their stop losses below this support. So when we broke through that, you can see this volume. That's the highest volume we've seen pretty much all the way back to here, right? So because everybody set their support stop losses just below this support wedge right here. When we broken that, everybody got stopped out and then started shorting the market because they think it's going to roll over like all the way down here because there's not a lot of support from list level to all the way down to this level, because you can see we're locking volume here. And so when everybody started to pile in on shorts and after their longs got stopped out, the market pretty much said just kidding and went back into this wedge. So when we came back into this wedge, that's a red flag initially for bears, because what we wanted to see was it come down, break through it, back test it, reject from there, and go lower. You guys know I always talk about the back test, how important it is. And so that's the first initial red flag for bears, that we're not seeing any back testing rejection here. We pretty much just broke through it and went above it, and we pretty much closed within it. So that was the initial red flag. And then, right, next thing we know, we just straight shot up. And essentially this became a short squeeze because of the speed of the move from essentially anybody who shorted in here is not in the red, because that's like what, August, September, October. It's about 3 months. Just say about 3 months. Anybody who shorted in 2.5 months or 3 months is now in the red, just in 2 weeks of trading. So that is pretty insane. So that's what a short squeeze looks like. And essentially, we had another clue here when we stalled over here. When it came up to this resistance where everybody knew it was coming, we stalled here because everybody started piling in shorts. And essentially, when we broke above it, we back tested it. See this back test? We broke above the resistance, came back, touched it, and then boom. So that is what the bears wanted to see down here. Break up through it, back tested it, and go lower. So that was the initial red flag when it didn't go lower. And what the bears wanted to see when we came up to here, rejected it and come back through it. But we back tested it and then bounced. So that is what the bulls wanted to see. The bulls saw that. You can see the next day, which was on Friday last week, we had another 2.2% move, which is Pretty insane if you ask me after we have a 8% move and we get another 2.2%, right? So that's why these back tests are so important and gives us clues to which direction to look for. And also the hourly charts never give us the hourly downtrend. You can see this initial move, this drop was the back test, even though we had a 1.5% drop. We never confirmed the hourly downtrend, and that hourly drop gave us the very first hourly oversold. That day, back test, bounce. Bulls never look back. Today, we also pull back a little bit in the morning and pretty much just tested this 375 support, and then we bounced. So we just never confirmed the hourly downtrend. There was a time during the afternoon where bears could have confirmed the hourly downtrend if we made a lower low, but they couldn't. It doesn't mean they're out of the woods yet. It doesn't mean that it's game over for them yet, because this is still the mini tightening range. Because we didn't make a new high today, we didn't break above Friday's high, so we can still confirm that hourly downtrend tomorrow. And because this is tightening range where it looks like this. Prior support, resistance, support. Now acting support. So as long as the bears cannot break bear in this tiny range, then bulls are probably gonna get another bull flag. So we'll see if the bears can actually show us anything, break bear from this tiny range. Otherwise, just stick to the trend and continue on your bull side, because why fight the bulls when bears have not showed us anything yet? If this rolls over and breaks bear, breaking below this pre-market low, then I would start looking on the short side. When we do bounce, I would scout that short for the lower low. So I'll be looking to add shorts around this area. Break bear, bounce, and it's when we start come back down again. This is where we add, and then I put my stop loss over here. So that is what I would do if I were wanting to short. But at the moment, because if you try to short anywhere here, right, you would never gotten it, right? If you're like, oh, bear break, started short here, next thing you know, you're red. Same thing over here. Bear break, oh shoot, short. Next thing you know. So that's why if I go like shorted, if we get a bear break, and I said, oh, let's start shorting here, next thing I know, if we could have just blew right back to 52 highs, right? So that's why I'm waiting for the pivot being set. And then when we start pulling back again, I'll short that level and have a clear level of stop loss to play up above it. So if you don't have a clear level of stop loss, then you don't want to be shorting blindly. So you definitely want to know where your levels are at. Otherwise, you would just get, next thing you know, market goes up 10%, right, in 2 weeks. So it's the last thing we want. And yeah, hourly trend will be our guide. As long as hourly uptrend is intact, bulls are in absolute full control, because they are in a daily uptrend. Weekly, we're not yet in the uptrend, but we are in a neutral trend. So next time we pull back, we're gonna have to see if bulls can come from the weekly uptrend. But as of now, no signs of pullback yet, because it will start on the daily. We'll see it on the daily, and we'll see on the hourly first, and then we'll see it on the 4-hour, and then we'll see on the daily on the pullback, and that's when we start to look at the weekly. As of now, bigger picture, monthly chart, we're in the monthly bull flag. So overall, because of the size of the pullback, you can see we only pulled back close to just 0.382. Initial move, pull back still within close to this above 0.382, meaning that's a bull flag, and then we pretty much bounced quite a bit. So if we, this is what a bull flag pretty much looks like. And we still haven't confirmed it yet though, because we got to break this 383.5, sorry, not 383, 387.98. Let's call it 388. So if we break about 388, that's a confirmed bull flag. And we're probably going to test all-time highs if we confirm that bull flag. Now this flag can keep flagging. So let's say we pull back for that weekly trend, we can still come back to, let's say, 360 and then bounce and still confirm that bull flag. So we'll see if the weekly trend ends up confirming. If we get a weekly uptrend, the likelihood of that bull flag on the monthly confirming, it just increases even more significantly. So let's see if the bulls, which way this equilibrium breaks. So it's very clear now. Hourly will probably break tomorrow. Yeah, because tomorrow we have CPI data in the morning, and that will definitely break this tiny range. So we just need like a 0.5% to break this range, right? So not that much. CPI will definitely do that. So get your A game on, because we're gonna have a lot of volatilities overall. So we'll see where CPI gives us. Even if we get a bear break here, the chart still looks really good overall. And I'll update you guys tomorrow. All right, let's take a look at SPY. SPY has not broken above its. It's broken on this pivot, but it's coming down to this one as pretty close as well. So let's say tomorrow, SPY comes up, hits that resistance, and QQQ bear breaks out of this tiny range. Then after it hits its top, so let's say it hits top of this range first, and as well as when SPY hits this top of this range at the same time, and then they say they both reject together and bear break, and that's when we start looking for a little bit on the other side. Doesn't mean it's like game over for the bulls or anything. It just means it's going to be a slight pullback before we see if this SPY can break above this level. Well, so, but CPI data is definitely going to dictate where we're going to break above this or not. And the same thing, hourly trend will be our guide. No hourly trend ever changed to the downtrend for SPY. And it's still in an uptrend. All right, let's take a look at Nvidia. Monster move. And you guys know where I talked about this bear break, right? Last week, where I said this is a head and shoulders bear break with absolute zero follow through. So when we have zero follow through on one side, when we give bears absolutely every chance to go lower, and they didn't take it, means we go to the other side. Obviously, none of us knew it's going to just V-shape all the way up to this 490, but we have a pretty good idea that it was going to at least bounce to probably 437. But after that, we just follow the market and the trend as well. So we're currently now testing this 490 zone, which is this top of the zone right here. And the market continues. We're probably just going to come up to 500 to test that area. Market's off already broke to all-time highs. So if Nvidia breaks to all-time highs, not going to be that surprising. So, but as of now, I want to see Nvidia change its trend. It's just a 1 inch move. So there's no daily trend change yet. So I want to see when it pulls back, see if it can give us a daily trend change back to bull's favor. Hourly trend will be our guide. Because you see, never had a downtrend here. No fake outs. Even this big drop here never confirmed the downtrend. It just kept on going. Hourly trend. The first sign I want to see from the bears for me to even consider on the bear side. Tesla relative strength today. Market was flat to red, and Tesla's up 4.22%. It makes sense when you have relative weakness for so long and starting to shift into relative strength. You can see the price shifts compared to relative to the market, and I get a little bit more follow through. But we still need to break above this 225 resistance there. If we do break above 225, then we have a daily uptrend confirm, and we're probably going to come up to test this 240 level. Not a lot of resistance here, so we're probably going to come up to test this 240 and try to fill this gap. If we do fill this gap, then we're going to test this teal looking resistance, which was prior strong, really strong support. It was acting as support for the whole year. So now it's going to act as resistance when we do come up to it. But we're still quite a bit away, so we'll see it coming when we do see it. All right, let's look at Apple. Apple pretty much broke a ball above this falling wedge, so we've been looking at this falling wedge together as well for many months. And I said that we're probably just going to drop in this zone until we break out of it. So very clear bull break here. Which bounce off the 12 EMA. So when we're 12 EMA, this tail looking line was acting as resistance when we're below it. When we're above it, you can see we bounce off of it acting as support. So that was a good sign, meaning we're green light for bulls. Came back up above this one as well. And then finally broke above this last resistance falling wedge. This is bull. And then you can see a lot of follow through. See when we broke bull as well, we can see a lot of volume as well. Bull volume. So bull volume increases when we bull break. That's a good sign. As well as we got a lot of follow through from that bull break. So that's also a good sign. So yeah, so we're pretty much testing this 185. So we'll see if we can hold these levels and just continue. Microsoft as well as its all-time high. So Apple, well, I wouldn't be surprised if Apple also hit all-time highs. All right, Amazon. So Amazon has stellar earnings ever since then. Also V-shaped the whole way. It's currently slowing down a little bit close to its 52 high, which makes sense. There's resistance here, but we back tested. So big bounce, back test the 140 support, held it, bounced back above. So there's a good chance we may break above 144 if we get just a slight green day tomorrow. But today, just a 5-day, so no fireworks today. But still looking like a daily bull flag to me. So as long as we hold up at 140, probably can just flag around and then get a good chance to break above 144. Market doesn't come from the hourly downtrend. Probably a lot of these mega cap techs are going to break to 52 highs. Google trying to fill its gap, still hasn't. It's been weaker because of its earnings sell off. And even though we bounced quite a bit, we still haven't able to fill this gap yet. We're pretty much sitting right at this 131. You can see all this resistance here. Now it's acting as slight support here today. So tomorrow, if this acts as support again, then we're probably going to bounce back above and try to fill this gap. Right, let's take a look at Microsoft. I mean, not much to talk about. I mean, it's hitting all-time highs, and now it's pulled back. Now it's testing this prior all-time high. So we'll see if that holds us support. So if this holds us support, 366, then it's probably going to head higher again, which is crazy, but we'll see about that. And yeah, prior all-time highs. It's 366 zone. We slightly bounced off of it today, but doesn't mean we're going to hold tomorrow, because we are just shy of confirming an hourly downtrend. Big enough drop, bounce off of it, but we still pull back a little bit into the end of the day. So if we do break today's low, that's an hourly downtrend confirmed. We'll probably get a little bit more pullback after that if the hourly downtrend confirms. Then we might come back down to 350 or this 354 if that hourly downtrend confirms and we break through this structure. So yeah, hourly down, that guide is going to be super key for me. If the bulls can hold it, then no red flags at all for bulls. Meta today broke to a 52 high. You can see got above it. Slightly lacking follow through, but I would give it some slack, cut it some slack, because today QQQ was flat to red. So Microsoft did Meta did outperform by slightly a little bit. So Annis ran pretty much like what? 19%. So 90% with a little bit of a pullback with no follow through. It makes sense. So let's see if we can pull back a little bit. Give this 325. Now see if we can act as support. If it acts as support, then bounce off of it, then we're a good chance to test this all-time 52 high again. All right, that's all I got for you guys. If you guys have any questions, feel free to comment below. And I did the commodities video earlier. And feel free to subscribe, like, and share if you guys made this far. And I will see you guys probably tomorrow, depending on my jet lag. But yeah, I'll see you guys then.